All right, so let's get into it. Does anyone have a chart that you would like us to use tonight? Is there a chart that you are particularly fond of for some reason? Um, doesn't really matter what the reason is. We got a request for the Kiwi, we've got one for the pound, one for the Euro Aussie. Again, it doesn't really matter which one we use because these principles apply to different charts, different markets. Doesn't really matter. If you have a favorite, just let me know. Aussie, okay, cool. All right, well, what we'll do is we'll look at the Euro Aussie then. Okay, now when we talk about tails, it doesn't necessarily mean that we're going to talk about a kangaroo tail, right? So tails, when I say, tails, to me, the idea is oil, says John. Um, the tail is simply that wick part of the candle. Now, we don't necessarily have important tails. Sometimes the tails don't really tell us much. But in this webinar, what we're going to talk about is when the tails do tell you something and what that something is. I'm going to give you examples. I'm going to give you rules. I'm going to show you how this works. Essentially, what we do when we look at the tails is we decide. Remember, as a naked trader, there are really two overarching guiding lights for the naked trader. For me, I put all these rules in the book Naked Forex, as I know many of you know. But for those of you that are not familiar with this approach to trading, you essentially have two things going on here. One, you have those spots on the chart where you have marked them clearly, as I have here on the Euro Aussie, these spots on the chart where the market has repeatedly reversed over and over and over again. The market's approached a zone, it's hit that zone, and it's turned away from that zone. Doesn't matter if the market approached it from below. It doesn't matter if the market approached that zone from above. So here we have the market approaching this zone here that I've identified with this line at 1.5069. It's approached it from above. 1, 2, 3, 4. I guess you would count that 5, 6 times. And 5 out of the 6 times it reversed when it hit there, and the 6th one it went through. And then sometimes you see the market hit areas from below. 1, 2, 3, 4 times the market hit 44 here, 1.44, and on the 5th time it broke through. So that's the number one thing that I'm looking at as a naked trader is the support and resistance zones. We call them zones, not levels, because essentially they're fat areas of the chart. They're sort of sections of the chart where the market reverses. They're not necessarily a pinpoint price level. So they're zones. There's a little bit of wiggle room there. And that it's critical that you see them that way, as fuzzy, sort of as big pillows sitting there, not not little tripwires or something like that. They're big fat areas, big fat brick walls or whatever. All right, so that's the number one thing. The second thing is the price action pattern that occurs when the market hits these zones. Not every price action pattern is useful. Not every price action pattern I'm able to hang my hat on, but a few I am. And so why that is important is because I know that if the market is going to, run off and hit a zone and then give me a reliable pattern, the odds now start to fall into my favor. Whereas before, if I had one of those things, I might not necessarily have a high probability trade. In other words, let me give you an example. Let's say that I'm watching the market here, and I say, well, the market's hit this zone here, this 55 or 1.5069 level. It hit it once here and bounced, another, two, three, four, five. Five times it's hit this level and it's bounced. So the sixth time it gets down there, and I go, you know what? It's gonna bounce. I'm gonna buy. It's tagged down here. I buy, and then it falls through. So I can't just hang my hat on one or the other. I actually need both. Now, what's interesting about this spot here on the chart is that the market, you know, like if I look at it like this, here, actually, let me move my chart a little bit. So what I'm trying to do is make it so that I want it to give me like there we go, like a really clean look at the last candle. I don't want it to give me any hint of the next candle. Like I might actually look at this candle right here, and I might actually say, you know what? This zone has really been a beauty. All these times the market's come down here, and it's hit this zone, and it's just pulled away. It's money in the bank. You know what? And I say to myself, you know what? I'm going in. This is it. This is what I'm going to do. I'm going to buy here because this is as good as money in the bank. And you know what happens next, of course, is that it isn't money in the bank. The market falls. And then I say, you know what? That's okay. Because, you know, it came back up. It didn't close on the other side of the zone. The market came back up, gave me a little wick here. This is really, really good. Remember, the market never breaks through here. It always holds. And in fact, the last two candles have given me nice wicks here. So I'm going to go ahead and hold on to this trade. You know what? I might even add to it. Okay, so I add to it, and then boom, I get blasted, and it falls all the way down to the next zone. So obviously that would have been a losing proposition. Well, what I'm going to show you tonight, or today, if you're in Europe, of course, is that, you know, there were some clues there, right? It wasn't just, you know, sort of hanging my hat on blind hope that the market was going to reverse there, because there were some clues there. There were some reasons why I might look at that and say, actually, given what the market's doing, and in particular, given what my tails look like, perhaps the market's not going to hold there. Perhaps the market might not turn around there. So let's take a look at the recent price action here, okay? Now, this is a 45.75 level. The market hit it here, and it made a nice, healthy bounce. It hit it again here, it made a little bounce, not quite as much. And then finally it hit it again here. So, you know, what's wrong with seeing the market hit this level like this, and it's giving me a really, you know, nice tail? Now, I might look at this and say, why the heck not wouldn't I go long? I've got a lot of things going for me. The last two times that it hit this level, it couldn't break through. And so let's do it. I might say that, you know, historically, this level has been pretty good. You know, the market held these candles down below it. The market held these candles down below it. And the market even stopped there on a rampaging uptrend. It stopped there and couldn't really go. You know, I had to at least spend a day there. So you know what? This is a pretty good spot. I'm happy using this spot as my you know, as my support level, and I'm going to go ahead and take a trade here because look, I've got this long tail here, right? I've got this long tail. Now, the only reason why we get a tail on a candle is because of the close. The close to me is by far the most important part of the candle. It's also why I use New York 5 p.m. closing time charts. And I insist on using them. And here's my logic, guys. The market's spent all of Asia going wherever it wants to go. The markets also had the European session to go up and down, go wherever it wants to go. And finally, we let in the Americas. The Americas come in and they bounce it around. And then at 5 p.m., the volume really starts to dry up. And there it actually is a few hours there where the market is deciding, where it wants to end up. And it's after the trading session in the States is closed. And really, there isn't quite the volume during those few hourly candles there. The real close of now the market can still move, but the real close of the market is 5 p.m. It's a real distinct time to stop trading. And remember, all the other traders, for example, in New York, they've closed up shop, right? So 5 p.m. is a great time to call a close. It doesn't make sense to me to call it later on, the midnight GMT close, because all you're doing there is you're allowing essentially the interbank market to help you out there with your close. And I think you really need a hard market close to define your closing price. So that, to me, it makes sense to let that close settle at the end of a natural session rather than sort of a fabricated one. So, and the reason why I'm going into this is because on this particular candle that we see at the far right edge of the chart, this candle tells us a lot. I mean, this is one of those beauties. And here's why. Yes, we've got the market moving up. Yes, we've got a really nice looking tail here on this candle, right? But no, it's not good enough to take a trade. It's just not. And does anybody see why that would be the case? Why would I say it's not good enough to take a trade? Any ideas? Ria nailed it. Ria, I agree with you. And that's not to say that other people's answers are wrong or whatever. All it's saying is that's what I'm looking at. I'm looking at the close of this candle relative to the previous candle. Remember, each candle's a battle, and they even mark the candle and tell you who won by the color. If the bulls win, they mark it green. If the bears win, they mark it red. That's the rule on my chart, right? My chart tells me who won every single day. It says, okay, bulls won that one, bears won that one, or whatever. Or if it's a draw, or if it's really close, my candle kind of looks like that, and I don't really know. Let's see, open, 63, close, 60. So actually the bears won that one, but boy, it was pretty close. That's why there isn't much red showing. And so here, there's a lot going on this candle, and here's what the tail tells me that the bulls think it's time to go higher because we're on that important zone. In fact, we went beyond 45.75, and the bulls pushed me up above 45.75, right? In fact, the bulls pushed me all the way up to I can't see it here. Let me move it up a bit. So, one second, guys. I'm just gonna. There we go. The bulls pulled it all the way up to 84, 46.84. So 9 pips higher than where I've drawn my zone at. Again, I know it's a fat level. It's not a precise price, but that's important, But they weren't able to push the closing price above yesterday's low, right? Let me state that again. The closing price on this candle was not above yesterday's low. That is critical. That is important. And that is the reason why I'm not so sure that the market has decided to bounce here. Let me state this another way that let's see if I can try and make this, what I'm trying to do is make this so everyone sort of gets the aha. Okay. The market's come down to this zone. It's gone beyond the zone and it snapped back up. Now, all of those things tell me that, one, it's on a zone. That's important. Two, it went beyond the zone and it snapped right back up on the other side of the zone, which hence we have a tail. So all of those things seem to support the bulls. However, the closing price, the line in the sand, the end of the day, at the end of the day, that most critical price that everyone agrees on is not higher than yesterday's low. So that tells me that, well, we don't know if the bulls can win. So what would I do as a naked trader is I would put, even if I wasn't sure, right? Actually, even if I'm sure I do this, even if I'm sure the bulls are going to win, what do? I put my buy order above the high. The high on this candle, let's just say I wanted to go long. The high is at 84, so I might go long at 46.90, right? I might go long at 46.90, which would be slightly above. But guess what happens, guys? Next candle. Again, the market falls down. Now, for those of you that follow my trade videos, I talked a lot about, because we actually had a few of these in a row, where we had these tails on some of the other Aussie pairs as well, where, it's like, okay, here we go. This could be a nice bounce here. Well, a lot of them did the same thing here, in various degrees of weakness, but because this next candle couldn't crack my candle high here, again, what am I saying? Okay, well, I don't know. What about the close? Did my closing price get above yesterday's closing price? No, not really. It went lower, It went lower. Yeah, it went lower. So again, what am I telling? What's going on here? Yes, I've got a long wick here, and I've got a long wick here. But the most important thing about the wick is its relative. It's just two things. How close? What's the relative relationship between that wick on my candle and yesterday's low? And what's the relationship between that wick on my candle and yesterday's close? Those are the two most important critical relationships of the candles. And that's why I use them in my rules, guys. So again, what this looks like is when you get a long-tailed candle like this, and you see these little babies that are sort of impregnated inside of them, which is essentially what this is. It's an inside candle, impregnated inside the big one here. They call them the mother candle. That's usually not a sign of we're going to go up here. It's usually a breakout. And I think on the next one we find out. Yeah. So now we see the close is below the zone. We see the close is below yesterday's low. It's not below this low, but again, that one had a long tail. But the close is below the last 2, 3, 4 closes. It's the lowest close we've seen since, I don't know, 2000 and probably 2013. So that's quite critical. And there is no tail. And then we finally see the markets falling. And now we're down to the next zone. So the important thing here is the relationship between the close and the previous low, and the relationship between the close and the previous close. If the closes are getting lower and lower, that means the bears are winning. And if the close is lower than the low, that means of the previous day. That means the bears are definitely really winning, right? So I guess what I'm saying is that you can't just look at the candle in isolation and say, let's go in and trade. That's where we get into trouble. And this is the number one thing that I see in traders is they'll find a really pretty candle with a really long tail and they'll say, okay, let's do it. Let's get in. And to me, you've got to interpret it in relationship to the other candles. Again, what was the previous candle's low and what was the previous candle's close? And what is that relationship to my current close? So yes, it's a beautiful looking tail right here. And yes, it's on a zone and all that. That's beautiful stuff. I love it. It's great. This is the kind of thing that makes, this could have ripped off a 500 pip bounce or something. But the problem is, of course, the closes tell the story. The tail, although it's nice and pretty, it doesn't really give you everything you want, which is the close. In other words, another way of saying it, instead of saying that the close wasn't high enough because it wasn't above the previous candle's low, the other reason to say this is that, or the other way to say this is that your tail wasn't long enough, right? Given where the market's recently been printing, and remember, this previous candle here, this one right here, that wasn't the only candle that was in this area. All three of these candles were in that area, right? So the market's really been up here. For the last 3 days, it's been up here, up here. It closed here, it closed about the same, and then it closed down a little bit. But it's been in this area right here. So for the market to fall out of that area was pretty significant. And the most significant thing, of course, is that the market couldn't trade any higher after that. It kept falling. All right, so let's talk about the first principle of tails. A lot of times when we see long tails, we think reversal, right? But it's not. It's if the close on that tail doesn't show signs of reversal. In other words, the close of the tail of the long tail is lower than the previous closes, as it is here. It can be the prettiest tail in the world. It still says that the market's fading. It's still falling. Because if you look at the line chart, the line would be going down. Look, see? Here's the line chart. The line chart never lies. The line chart says, look, we bounced here, we've been going up, and now we're pointing down. And does the line chart give any signs of bouncing? Nope, not at all. It never turned around here. In other words, the closes never started inching back up. The closes just went lower and lower and lower and lower and lower. They've never given us a sign of bouncing. Now, contrast that to over here where you see this really sharp, right here at least, you see this really sharp move up. All right, so when we're looking at closes, we obviously want to see them on a zone, but we also want to interpret them compared to the previous candle's lows and the previous candle's highs, of course, but also the previous candle's closes. So let's do that. Let's write out the rules here. Number one is our tails must print on zones. If they print in the middle of nowhere, then it's no good. Like, for example, this one. This candle here printed a nice tail, but because I don't have a zone drawn here, it doesn't matter how pretty it looks. I'm not going to take a trade there. It doesn't matter, right? It just doesn't matter. Let me see if I can find another one. Well, I don't really have my zones drawn back there, so I don't want to say, Here's one. This is a great one. Okay. Remember what we say. Nice long tail. Wow, this could be like, you're looking at this, you're thinking, wow, this could be a double bottom, right? This is awesome. I want to zoom in so this looks, I'm going to zoom in on this sucker. This is a good one to look at. Okay. I think this was the one that I was looking at right here. No, that wasn't it. That wasn't it at all. Okay, 1 second. Let me find it again. Sorry. Where was it? I had one in the middle of nowhere, didn't I? Yeah, there it is. There it is. Okay, so it's September 23rd. September 17th or something like that. Okay. It's right here. All right, so here it is. And I'm looking at this and I'm thinking, wow, look, I'm thinking double bottom. It bounced here, it went up, came back down. Well, problem. One is my zone's down here. It's not in here. Two, what do we say about the close? When we see that tail, one of the really important features of how strong is that tail is what about the close? The close here is what? It's lower than the previous close, and the close is lower than the low of the previous candle. If the close is lower than the low of the previous candle, no good. Now, in this case, the market did spike higher than the high of this candle, but again, two things were not lined up for it. One, well, actually three. Three things were not lined up for it. One, the tail didn't print on a zone, so that's almost worthless. Two, the candle couldn't close above the low of the previous candle. And three, the close was actually lower than the previous close. So we get a lower close, a lower close, a lower close, so no real reason to go long here. It does make another move up. It came up for a little bit, but it certainly wasn't enough for me to hang my hat on. Now, let's look at another principle here, because you're going to look at this one and you're going to say, hey, Walter, well, what about this one? What about this one? You're telling me the two rules. Actually, let's write down these rules and make sure we got them. One is, of course, you want to close on, or you want a tail, a long tail, on a zone. The other one is, what's the close relative to the previous candle's range? How does the close compare to previous candle's range? Okay? How does the close compare to the previous candle's range? You have the prettiest, longest tail in the world, but if it doesn't compare favorably to the previous candle's range, and by range I mean high and low, then it's worthless. So how does the close compare to the previous candle's range? And number three is, how does the close compare to previous candle's close? How does the close compare to the previous candle's close? Okay? So, there you go. That is, my friends, that is, those are the rules. Now, you look at this one and you go, okay, all right, Walter, I hear what you're saying. Looks like one, if I can go to my other rule here, actually, let's just go ahead and do that. My tail, so I'm looking at, we're talking about long tails here. So my tail is on a zone, right? So my tail is on a zone, which is what you want. And the close actually compares favorably to the previous candle's range, right? Because look, right, let me get it right. There it is. This close here is inside of the high and the low of this candle, all right? So that's good, right? The close is inside of the previous candle. So that means that the close is not lower than the previous candle's low, is it? It's actually higher than the previous candle's low. And the close is actually lower than the previous candle's high. So it settles really nicely. The close of this long-tailed candle here settles really nicely inside of the previous candle's range, which means it's not too far outside of it, right? So I like this. This is good, all right? Now, how does it compare to the previous candle's close? How does this compare to the previous candle's close? Well, previous candle closed at 1.4181, and this candle closes at 1.4190. 1.4181 and 1.4190. Okay? So what that tells me is it actually closed higher. So this is good. This is all bulls are in control, right? Now, the other thing, of course, that I'm looking for in a reversal tail, got to put in a zone. It's got to be in the previous candle's range, and it's got to be good, compared to the previous candle's close. This is a higher close than the last candle. So bulls are all marking their territory here, and it looks pretty good for the bulls, right? Wrong. Here's the main problem with this candle, and that is the close of the candle compared to the candle's low and the candle's high. The problem with this candle is that the close is essentially close to the middle of the candle, right? Because the close of this candle is in that middle area rather than the extreme high end, what that tells me is that the market may not really be ready to go. This may not be a reversal candle because of where the close is relative to the low and the high of this candle. So that's my fourth rule here. Close of the candle compared to candle high and low. The close compared to the candle high and low. And obviously this candle high and low tells me that this close is actually really close to the midpoint. It's not in the midpoint, it's a little bit above the midpoint, but you know what I'm saying, right? So that is where this fails. It's a beautiful long tail. The close is higher than the previous candle close. The close is settling nicely inside of the previous candle's range. Everything looks good except for the close compared to the rest of the candle. In other words, it's got too much wick on the other end, and it's essentially what we would call a neutral candle. Doesn't say buy, doesn't say sell. Now, of course, what happens here is the market does go up, right? But to me, it's not good enough to take a trade. The other thing I'll say is that the next candle did not trade higher. So any sort of buy above that high wouldn't have been triggered on the next candle. And again, generally speaking, I like to see it go on the next candle. All right? So, now let's, there's one more thing though. There's one more rule, and if I don't have a better one, I'm going to use a candle, but I want to, yeah, okay, let's use this one. So this candle right here, guys, let's compare this one. So we've got our 4 rules here, all right? So now I know that these are the 4 rules I'm looking at, all right? So what I want you to do is run this candle now on the far edge of the chart, run that candle through our rules. Our tails must print on a zone. Does the tail print on a zone? Check. Yep, it's on a zone. Certainly is. How does the close compare to the previous candle's range? Well, it's pretty good. It's actually inside of the previous candle's range. Check. How does the close compare to the previous candle's close? Well, it's right there, really. I mean, yes, it's a little bit lower, but it's still above the zone. And it's really, really, really close. What's the close? 49.43. The previous candle's close was 49.54. So it's 11 pips lower, but it's right there, So that's an okay one, The close is comparing favorably, at least not negatively to the previous candle's close. It's a little bit lower, right? It is a little bit lower, I'll give you that. What about the close compared to the candle high or low? Well, that close is right up there near the high. It's giving me a lot of tail down here. So I love the fact that we've closed on the high end of the candle. This really is a bullish candle. It fits pretty much all of my rules here. But what happens if I go long here? The next candle triggers a buy. I go long, and my stop, because my stop's down here, I get stopped down on the very next candle. This was a big fat loser. What was wrong with this trade, right? Well, the tail didn't stick out. And that is one of the most important rules here, is that this tail didn't stick out. Now, remember, I'm talking about, compared to recent price action, does the tail stick out? Tail doesn't stick out. How can I say that this tail doesn't stick out? Well, looks to me like this tail right here, all of it, almost all of it, is in the same area of the chart that the previous candle is. Just a little tiny bit of it sticks out from this previous candle. In fact, that is contained in this candle's range. So this tail really didn't go anywhere special. It's where the market's been. Now, what I want you guys to do is contrast that to this candle over here. Because this candle, fortunately, it has everything. Did this candle tail print on a zone? Yep, sure did. It went. The tail went straight through the zone and snapped back. How about the? So that's a big tick. Printed on a zone. The close. How does it compare to the previous candle's range? Well, it certainly is below the high of the previous candle's range. Below the high. So that's good. It settles inside that range. That's a tick. How does the close compare to the previous candle's close? Well, it is a little bit higher. I'll give you that. It is a little bit higher, but not much. It's really, really close here. When you look at the overall candle size, it's pretty close. So again, it's not ideal, but it certainly isn't a negative here. It's just sort of average, 4, how does the close compare to the candle high and low? Well, that's definitely right down there on the low. So it's definitely in that bottom section down there. So that's a big tick. And finally, does the tail stick out? Does it spend time outside of the recent price action? And when I say recent price action, I'm talking about the last week. 1, 2, 3, 4, 5. All of these candles here are in this area. Actually, let's draw a box so you can see. Visually, I want you to think about it this way. Look at that. This is where we are, in terms of our price action. The market's contained in this box, and this is where we are today. So let's compare it. This is where we've been, and this is where we are today. We're sticking out from where we used to be. We're definitely sticking out from where we were down here the previous week, but last week we were in this area, and now we're beyond it. So this is definitely a tail that has everything. It has everything going forward. So that is awesome. That's awesome. It's a great reversal candle. Okay, I'm going to go over some comments here, guys, because I've been concentrating on the charts here. Let me just go through and make sure we clear everyone off here. There's a one on March. Okay, so this one was this Pedro. Hey, Pedro's got a great question. There's another one on March 5th. Okay, we'll take a look at the pound, Lindy. There's one on March 5th, similar, that worked. Can you comment, Walter? March 5th. This is from 2000 and I'm guessing it's this right here. This one, right? This one you mean? Pedro, this is the one, right? Yeah. Okay, let's take a look at this one, guys. How does this one compare to our rules? Beta, the color of the candle, it doesn't really matter to me. I mean, obviously, ideally for a bearish one, we want a red candle, and for a bullish one, we want a green one. But when we're talking about tails, the close and the open are going to be really close anyway, right? Ideally, the close and the open are going to be really, really close anyway. So if we look at Pedro's here, let's look at our rules again. Let's remember what our rules are, right? So Pedro's talking about where's March 5th? Here it is. Okay. So let's talk about our rules. Our tails must print. So let's first of all mark the candle. It's right here, right? This is, I believe, the one he's talking about. Right here. Okay. So does the candle print on the zone? No, no. It's not on top of this zone, and it's not on this one. It's in between them. So that's a negative. 2, how does the close compare to the previous candle's range? Well, unfortunately, another negative. It doesn't compare favorably, and the reason why is because the market closed outside of the previous candle range. How does the candle close compared to the previous candle's close? Well, it's lower than the previous candle's close. So if we're looking for any reason to buy, that's not necessarily good. But again, if it's close enough, that's okay. But this one is actually a little bit lower. So that's another negative here. So we've got 3 where we're not quite fitting, the rules that we want to see here. That's another negative. How does the close compare to the high and the low of the candle? Quite favorably. It's up in the upper area of the candle. So that's definitely a tick. That's not a bad problem, a bad thing here. That's a good candle setup. It's a nice tail there. And then finally, does it stick out? Yeah, it does stick out from recent price action. You could get nitpicky and say, well, it doesn't stick out from these candles right here, but those were a long time ago. So it does stick out from recent price action. So that would be another tick there. So we've got 2 out of 5. And again, that's why I would say this is no trade. Yes, it went up. Yes, it did all that, blah, blah, blah. But it's not a trade. Just because it would have made money doesn't mean we have to retrofit our rules to make it a trade. You know what I mean? There are all the time there are going to be situations where the market goes in a direction and I'm going to go, well, it's a bummer I didn't take the trade. But remember, the answer was it didn't fit my rules. So I don't have to retrofit my rules to make every winner, a viable trade. So that's the rules compared to that one. I think that was a really good one to look at, actually, Pedro. I'm glad you said that. Yep. Okay, cool. So Lindy wants to see the 1 hour pound. Let's look at the 1 hour pound. Okay. Remember, tails must print on zones. Tails are what do we say? Tails must print on zones. Tails must compare favorably to the previous candle's range and the close of the previous candle and compared to the previous candle's high and all that. So yeah, and does it stick out? So yeah, we know that. We know that this one's not going to line up. But Lindy says that we've got a really interesting one on our 1 hour pound. So let's take a look. Okay, so all right. So what's interesting about this one, Lindy, to me, is that it's so we're looking at the tail here. It's a nice tail. So yes, it's on the zone. No, it's beyond the zone. Now, if it had printed right here, for me, that would have printed on the zone, but it didn't. It printed beyond the zone. Remember, we got bullish break. We got bullish move here. So the market blew through this zone, and we're on the other side of it. So this is kind of where we might look for a buy setup, but not a sell. So that's the first thing is no, doesn't compare favorably. 2, how does the close compare to the previous candle's range? Fine. The close is inside of that previous candle's range. So this is a really nice tail. The tail also compares favorably to the previous candle's close because this candle closed at 67.86, but this one closed lower at 84 by 2 pips. But remember, we're talking about 1 hour charts, so the pips become more important. And then the close compared to the candle low, hey, it's right down on the low, actually. Brilliant for a sell candle, right? And then finally, does it stick out? Yes, it sticks out. So we have some rules that we're following quite well, but the other ones we're not. So no zone in the 67.90-ish area. I've got this. To be fair, this is a 4 hour chart, but my 4 hour chart, I've got it drawn at 57.79. Remember, you can see it bounce here. Remember, when you're talking about lower time frame charts, the zones get tighter. So, for example, I might have a 50 pip zone on a weekly chart. I might have a 20 pip zone on a daily chart, but on a 1 hour chart, it's got to get tighter, right? On a 1 hour chart, it's got to get tighter. So yeah, so I would say that this one doesn't quite, for me, doesn't quite fit the criteria, right? Doesn't quite fit the criteria. Now, what I want now, what I want to talk about, guys, is that because we've had so many of these, this is really awesome. And in fact, we've got one right here on the pound. So let's just, while we're on this chart, let's just talk about this one. Okay, so so far what I've talked about is those candles that are essentially, reversal type setups, right? Which is what most traders want to trade. You can read all the trading books in the world that tell you trade with the trend, trade with the trend, trade with the trend, but most traders don't want to do that, in my experience. Most traders want to find that pinpoint, that reversal, right? So, what I want to show you is how, because we've got this really beautiful candle here. Look at this candle. Look at this. Did the tail print on the zone? Yes. Did the tail, close of the tail, snap back up into the previous candle's range? Yes. Did the close compare favorably to the previous candle's close? Yes. It closed higher. Remember, this candle closed at 68. This candle closed at 68.04. Now, that may not seem like a lot, 4 pips. Remember, we're on the 1 hour chart here. We're not on the daily chart. So that's a big deal. Pips are a premium when you're looking at 1 hour candles. What about the close compared to the candle high or low? Right up near the high area, really nice. Really beautiful tail here, guys. Really beautiful. Does the tail stick out? Yes, it does. So I would say that all the rules for this tail are great, right? But guess what? The last piece didn't fall into place. The market never traded higher. Look at that. I mean, we do have a zone here. I have a drone. Remember, it's not going to look perfect because it's a 4 hour chart that I pulled up here. But you can see 4 hour zones should definitely be important in 1 hour charts, and that's definitely the case here. But look what happens, guys. The market, so we could actually say this is sort of the entry rule, the sixth rule, which is the market never took out the high of this tail. Look, it never did it. The next candle just fell. And if you look at the charts right now, you are going to see a plethora, a veritable plethora of examples. I believe our Aussie Swiss now. Yes. Here we go. Nice long tail. People were asking me, should we go long? Or sorry, should we sell? Well, is the tail on a zone? Yep. Did the tail compare favorably to the previous candle's range? Yep, sell right inside that previous candle's range. How about the close compared to the close? Well, it did go, the previous candle closed at 83.18. This one closed at 83.20, so it's within 2 pips, guys. On a daily chart, give me a break. That's pretty good. That's really good. So it does compare to the previous candle's close. What about the candle high and low? Yeah, well, it's right down the low. It's in a nice little area down here. So that's really beautiful. Does it stick out? Yes. The candle, in fact, does stick out from all of these candles over here. So I think it actually even sticks out from this one, if I'm not wrong. 83.89. And yep, sure does. It has 11 pips. This candle has 11 pips on this candle. So all of that is great. Every single rule on this tail, it fits. And that's why, like, early in the week, people were asking me about this one. And I said, let's just wait and see what happens on Monday if we go lower, or if we're after the beginning of the week. The first couple of days of the trading week are perfect because they sort of set the tone, and they really should kind of go in the wrong direction. And so it never went lower. Look, it kept following this trend line. The market never broke lower, and it went right back up. And this is the kind of thing you see when the market, again, when we were talking about little pregnant things here, when the market the rule really is an entry rule. Rule number 6 is to trigger a trade, the market has to make a new high or a new low. Right? It depends on new high for a buy trade, new low for a sell trade. And that's all in the rules, guys. That's all in the rules of naked trading. Most traders want to get in on a retracement. That's why their win rate suffers. Most traders want to have a high win rate. Well, the easiest, simplest, and fastest way to a higher win rate, I don't care what your trading system is. It doesn't matter. The easiest, fastest, quickest way to bump up your win rate is to use this simple sixth rule, which is I don't get into a buy trade until the market makes a new high, and I don't get into a sell trade until the market makes a new low. Don't take my word for it. You test that on your own and you come back and let me know, because that is the fact. If you want to bump up your win rate, and most traders want two things. They want to trade reversals and they want a high win rate. Well, guess what? By doing that simple thing, that one simple thing, you will in fact bump up your win rate. If you wait for the market to make a new low here before I get in a sell, I lose out on what? These moves right here. I miss out on this loss, because make no mistake about it, that's a loss. And the same thing, exact same thing happened on, nope, not that one. Was it, where was it? Was it the pound? I thought it was some of these, Aussie period. Well, yeah, well, Euro Aussie, I think. Euro CAD. No, it was Euro Aussie, I believe. We were just on the Euro Aussie, weren't we? Yeah, Euro Aussie. Same exact thing here. Market never made a new high here. This one didn't quite fit the criteria, but it never made a new high. When you see a pregnant candle inside of a kangaroo tail, get ready for a breakout. And that's what we saw across the board this week. Okay, so I just want to make sure that everyone's clear on the rules here. When the market gets to a level and you're looking for a reversal, you want to see all of those things. When the market gets to a level and prints a tail and it doesn't fit and you start to miss out on those 6 criteria, well, guess what? It's going to be a failure. It's probably going to be a failure, and you can go the other way. And so for those of you that, every week I have a webinar when the market opens the first hour of the week, and we saw these, and it was like, okay, well, let's just see what happens on Monday. And across the board, we got these little pregnant tails. It's a pregnant tail when it does that. Here, let me show you. This is a pregnant tail right here, right there. That's a pregnant tail. It's got the little baby in there. That's not good. Believe me, that is not good. Go back and test it for yourself. Never take anything that someone says is gold. Go back and test it for yourself. But when you see a pregnant tail like that, ooh, ugly, ugly, ugly stuff. And that's exactly what happened. Euro New Zealand. Okay, let's take a look at the Euro New Zealand. So we can pull up charts here. I think we have a few. Actually, we don't have much time. It looks like we're right up against the gun here. Euro New Zealand. I got a little bit verbose, which isn't normally the case. Usually quite I would say, on this one, it actually looks like I should have a zone right here based on what we've seen. And, Euro New Zealand, here's what I'll say about the Euro New Zealand. If we can close below this candle low, it's see you later, awesome sell trade situation. That candle low is 58.56. If we can close below 58.56 on the daily, I would say this is going to be an unbelievably fun ride down. But we've got to close below that candle low, because that's the line in the sand here. Yeah. It's 50. What is it? It's 57.48. Sorry. It's 57.48. That's the price. So let me write that on here. So I'm actually going to watch this one. It's awesome. It's 57.48, right? Daily close lower. And that will do it. That will be enough for me to jump in that sucker. Pregnant tail again, please. Pregnant tail again, please. What do you mean, Mr. C? You want pregnant tail. If you see a pregnant tail, it's usually a sign that the market's gonna it's gonna fall. Like here, compare this one, guys. Compare this one. Look at this will be the last thing. Look at this one right here. Look at this tail right here. The market, it gave us all the rules. If you go back and look at our rules, they're all really good for a reversal. And the market made the sixth rule as well. It made a new high. It triggered a new high here. It went above there. It didn't give us a little pregnant candle down here. If it gave us a little pregnant candle down on the zone, that would have been a possible break, fall. It would have fallen out. But it didn't give us a little pregnant candle down there. Instead, it triggered a buy above the high of the tail. So, okay. Pregnant tail. Examples would be like, I mean, they're around all the Aussie pairs, really. Pregnant tail. Let's see if we can find one. I think the 4-hour Euro Aussie has some. I think the Aussie New Zealand. Okay, New Zealand. Someone says the New Zealand dollar. We'll see. Not really. Here's one right here. Pregnant tail. Here it is, guys. Look. Here's your tail. You might say, well, it didn't close high enough or whatever. But that's the only thing. It fits all the rules. It's on a zone. Blah blah blah. But guess what? The candles start piling in at the bottom of the kangaroo tail. See how all these candles are piling at the bottom. They're all pregnant. They're all inside of it, and finally it folds and breaks through. And they never go higher. High is right here. Any buy order would be right here. Again, fastest way to increase your win rate: wait for the market to make a new high to get into the buy trade, and wait for the market to make a new low to get into sell. Thanks so much, guys. I really appreciate it. Have a wonderful trading week. I really appreciate you taking the time to be with us. We will see you next week. I wish you very happy trading, and take care, guys. Thank you so much. Thank